Good afternoon and welcome to the Eastside Recovery Hub Financial Webinar Series hosted by One Redmond. Today is May 21st, 2020. My name is Christina Hudson and I am Executive Director and I will also be your moderator for today. All our Eastside cities and chambers are partnered together to give the highest level of support to our business community. And I want to thank all these partners on the screen, our Eastside cities, our chambers, for all the work that they are doing. And please note, if you need to see an advisor with questions that were not answered today or for technical assistance, please reach out to One Redmond at info@oneredmond.org, or you can go to the new restartup425.org website to sign up and someone will contact you. I also want to note that past webinar recordings and resources are available on the Eastside Recovery Hub webinar page at eastsiderecoveryhub.com. So today's webinar is part of our Financial Resources webinar series, and the focus is the first look at the PPP loan forgiveness applications. And right at the top, I want to acknowledge that this is a monumental program that the federal government, including our federal legislators, the Small Business Administration, and the Treasury Department, along with an expansive network of banks and financial organizations, they all work together to quickly make a total of $659 billion in funding available to small businesses during this time. This is a historical milestone, and it did come with some bumps and challenges, as the distribution of the funding at this scale and the expedited timelines have never been done before. We recognize that there is still a need for further clarification, and we are expecting additional guidance from the federal government. Once that comes through, we will do our best to host another webinar to ensure that you are getting all the information you need from our experts. Access to the most current information will always be on our eastsiderecoveryhub.com website. So before we begin, I also want to cover a few housekeeping notes. If you need technical help during the webinar, please use the chat portion and the chat box that we have down below. We have staff on hand to try to help you with any technical issues you might be experiencing. We also will post links in there to pertinent documents that you will be able to access, and that again will be in the chat box. The tools we have available here will also be available on our website, as well as being included in our follow-up email. If you have questions for the speakers, please use the Q&A box, and we will do our best to get as many questions answered as possible. This webinar is also being recorded, so we will send out a link as soon as it's ready. We know that all you business owners out there are seeking this guidance, and we are hoping to help you navigate through all the information as we know it today, May 21st, 2020. As we always say, this is still a dynamic process. As of right now, all the content you will hear on this webinar is accurate. So let's get going with our program. Today, we have three speakers. We have Mark Costello, Deputy District Director of the Seattle District Office at the Small Business Administration. We have Steve Burke, Western Washington Regional Manager for Washington Small Business Development Center, and Janie Sacco, Marketing and Outreach Specialist, Seattle District Office for the Small Business Administration. And now I would like to turn it over to Mark Costello, Deputy District Director of Seattle District Office, U.S. Small Business Administration. Mark?
Great. Thank you so much, Christina. I really appreciate the opportunity to visit with your membership. I think we've had a chance to talk a couple different times now, and the ability to connect like this is certainly a positive aspect of what has been obviously a pretty challenging couple of months. So, but we're kind of going through this evolutionary process with the Paycheck Protection Program. You know, when we started it, we were waiting for the guidance, and eventually the guidance came out. And as you alluded to, Christina, the tremendous effort by a lot of different folks in the lending community resulted in just a significant amount of money being distributed out to small businesses to support payroll needs primarily, and hopefully to keep a lot of organizations intact. Hopefully those organizations now are starting to see some light at the end of the tunnel in terms of the ability to kind of re-engage as we see the economy starting to open back up. So we waited for the guidelines on the program. Eventually that happened. The money went out. Then we started to wait and wait and wait for information about this forgiveness process. And as you've kind of alluded to, this is the big thing right now. This is what we're going to talk about today in this program. And I know it's been frustrating because this thing has been built on the fly, but we're now at a point where we actually have the first significant piece of direction as far as the PPP forgiveness process, and that is a forgiveness application that small business PPP recipients are going to be completing as part of the process of achieving forgiveness on their PPP loans. And I think that what we've got put together today is a fantastic first cut at this particular topic, which is not easy. It's fairly complicated and can be overwhelming, and so we're just extremely appreciative to have Steve Burke here from the SBDC Small Business Development Center, as well as Janie Sacco, who we actually were just recently able to bring on board into our organization. Janie's got a significant amount of lending experience working with small businesses over a storied career here in the Seattle area. Steve works one-on-one with businesses every single day, so they're both really well suited to talk to the membership today about the issues around and maybe some of the challenges related to this PPP forgiveness, but also to really help to navigate this process. And I think this is going to be a great first step just to give people some initial exposure. Here in the next couple of weeks, believe it or not, we're waiting for more guidance. There will be more guidance coming out for both lenders and borrowers to probably, hopefully, answer some of the really nitty-gritty detailed questions that are naturally going to come about as a result of this forgiveness application. But we're going to continue to push that information out through our channels. And I guess the only other thing I wanted to say, just as a sort of an overview kind of a comment, is while we have been talking so much about the PPP and SBA's other financing programs, I think it's really important, especially with Steve here joining us today. I want to make sure people are aware of and thinking of opportunities that exist out there to connect with some of the different resource partner organizations that SBA has the privilege of working with. Steve represents the Small Business Development Center. They've got a significant number of professional business advisors situated throughout certainly the Puget Sound area, as well as the entire state, that are available to work with businesses one-on-one to navigate and help to strategize ways to deal with the current situation, to talk about approaches to re-engaging in as I said, the economy is starting to now open up. How are they going to do that? What kind of strategies and tactics are going to be required to do that? What kind of pivots are they going to need to be making? Organizations like the Small Business Development Center, SCORE, the Women's Business Center, as well as our Veteran Business Outreach Center are perfectly suited to work with you guys, to sit down, roll up their sleeves with you and have those kinds of conversations. So SBA.gov /WA. That's the Seattle District website. And that's going to be a nice portal for you to get contact information for all those different organizations. So keep that in mind. We're going to get past this PPP thing. We're going to get the forgiveness. For those of you that have yet to apply for a PPP loan, there is more positive news there in that there's over $100 billion remaining to support that effort. So if you haven't yet applied for a PPP loan, the opportunity is still out there. We've got a number of really good lenders ready to provide that funding for you. And more positive news is that they don't have backlogs right now. They're ready to put the money out to you guys in a really expedited fashion. So with that, I'm going to go ahead and turn it over. Christina, do you want me to turn it back over to you, or do you want me to dish it right
Yep,
to Steve?
I can take it. I can take it.
Okay.
Thank you so much, Mark. We appreciate
Thank
it.
you. Okay.
And now we will turn to Steve Burke, Western Washington Regional Manager for the Washington Small Business Development Center. Steve?
Thanks, Christina, and thanks, Mark. Happy to be here with everybody today. I want to preface by saying that this is going to be a pretty complicated topic, as Mark alluded to. And the other thing I want to say relative to that is that I'm not a final authority in this. I have spent most of this week cross-referencing all of the available information about this application and the process with the application itself and available analysis. And so I'm going to give you the best information and the most current that we have today. But the thing to remember is that when it was designed at the beginning of March, the PPP, or the Paycheck Protection Program, was designed to be just that, essentially employer-directed unemployment. And the basis of it at that time was that the funds were to be used during the 8-week period following funding. This application information has provided some additional leeway relative to that, but I'm going to proceed on the basis that everybody, that we know that the original purpose of this loan. It's important also to note that Congress is right now debating various possible changes to this. And I understand in the news this morning from a bipartisan perspective, but when those changes come about, it may change a lot of what I'm about to tell you today. But today I'm giving you the best information that we have at this time. And so with that, Christina, I'll say advance the slide as we go through. So today we'll cover the basic application information, the required documents for that have to be submitted, and all those documents that have to be maintained but don't have to be submitted, how to calculate payroll use costs and the forgiveness elements from a payroll and dollars perspective. I'm also going to talk about the impact of the EIDL loan on the PPP, although there's a big question mark there. Completing the loan forgiveness application, what the purpose is of the worksheet A is, and how you're going to be able to utilize that, as well as the FTE, full-time equivalent calculation criteria that has always been a part of the PPP. We just didn't know how it was going to be dealt with. And then I'm going to have a little bit on self-employed individuals and sole proprietors. And I will follow up with a final of some things that we don't have clarity on at this point in time. Next. So in the PPP loan forgiveness application requirements, the interesting thing about this document is that it's a pretty scary 11 pages. But as I spent time studying this, I realized that there's only 3 pages that need to be submitted. And one of those 3 pages is a set of check boxes about your certifications as to the accuracy of the information that you submit in the representations and certifications that then require your signature. So the other 2 forms literally are the application and loan forgiveness calculation form, and then what's called a Schedule A that adds in the additional components to complete the application. Next. Here are the documents that you have to maintain, but that you have to maintain but don't have to submit. So again, out of an 11-page document that we received, that many of you may have at this point in time, you only need to turn in 3 pages, but you do need to have and maintain some additional pages and documents. And that includes a Schedule A worksheet, which I'm going to cover, that includes calculations on both salary and wage reductions, Table 1 and Table 2, that also include documentation relative to anybody who doesn't want to come back to work or didn't come back to work. And I'll have some new information for you on that. All records relating to the loan, including the loan application itself, certifications for the loan request, the borrower's compliance on the loan requirements, any documents, payroll documents that you used in order to both justify the loan in the beginning and justify your loan forgiveness at that time you're pursuing the loan forgiveness. Here's a key though, you have to retain these documents for 6 years, and you have to be able to make them available for inspection from an auditor if in fact you are flagged for that. So got to keep that up to date. Next. So starting from the top of the basic application, going to require your employer identification number, the loan number, which was typically assigned by the SBA through the lender, the bank that you were dealing with. That's the PPP loan number. And then a number that corresponds to the lender, so that when this thing gets submitted and or reviewed by the SBA, you've got who the lender that you dealt with, the loan that we're speaking of, and the business specifically. So they also want to know the PP loan amount you were given and the disbursement date. Again, that's a pretty critical part of this. Then they want to know the employees, the time of the application. So when you first made the application for this, how many did you have with you? And employees at the request for forgiveness. The Treasury has said that they are going to audit all PPP loans issued in an excess of $2 million. So if you have a PPP loan less than that, make sure that you do not check the box asking if you received a loan of over $2 million. Next slide. So let's talk about payroll use and the schedules. You're going to need to describe in the front page of the PPP application what is your regular payroll schedule, and I'll talk to you more about why they're asking for that in a minute. Also, you've got to identify whether or not you are working on an accrual basis or a cash basis. So they're talking about what's paid, which is the day the checks or ACH transactions are originated, or what's incurred, which is the day that costs are earned. And that's also another new important distinction in this application. But the covered period, as a definition, is the 8-week period following funding of the PPP loan. What's new is that some costs incurred before the 8 weeks, but paid during the 8-week period, as well as some costs incurred during the 8 weeks, but paid afterwards, can also qualify for forgiveness. So people were really wondering, does it include payroll prior to the 8 weeks? Does it include payroll, or if I pay payroll after the 8 weeks? What's also new is that there's an alternate payroll covered period. This allows you to actually start the 8-week period, not on the date of funding, and you can make this election, but you can do it on the first date of your payroll period following funding. So for example, if you get funded on the 20th of the month, but you have typical payroll periods that start on the 1st or pay your employees on the 1st and the 15th, then you can elect to have the 8-week period start on the 1st of the month, which is the first day following the funding on the 20th, as an example. Next slide. So one of the big question marks is those people who get both the EIDL loan and the PPP loan. And there's been a big increase in the EIDL loans being funded. So we're going to see more of that rolling out over time here. So in the original legislation, there's 2 things that you need to know. One is that the idle advance, which over 3 million of those have already been processed and funded into those who applied for the idle loan. The idle advance is going to reduce the amount of loan forgiveness in the PPP. And that's an important thing to note. So if you received an idle advance of $10,000 and you had a PPP of $100,000, the amount of loan forgiveness that you will be eligible for is only $90,000. So it's one of those things that's important, and that shows up in the way in which you complete this PPP application. So one of the things to verify that they need is the idle application number, and it's used to do this cross-check. But here's the unresolved issue. Many more PPP loans have been processed than idle loans by probably 10 times. Part of the reason is that the SBA themselves, through the Office of Disaster Assistance, is processing all of the idle loans. But the PPP loans have been processed through all of the banking institutions, over 5,000 lenders nationwide, who really kind of have formed a really large, if you will, core or army of professional lenders who are able to process the PPP loans and do it in a much faster manner than the idle loans have been processed. We know under the original legislation that the idle loan and the PPP loan cannot be used for the same purposes. But what we don't know is how that's going to be resolved. If the idle loan was issued prior to the PPP loan, and I think prior to early April sometime, then it should have been refinanced into the PPP loan, especially if you'd used the idle loan for payroll. But very few of those actually happened that way. So what we don't know is for those that received the idle loan after they've been funded for the PPP or after the 8-week PPP loan forgiveness period is over, which is quite likely for many of the idle loans still to be processed. We don't know how that's going to be resolved, and we're waiting for additional guidance on that. Next slide. So completing the application. It requires you to start with something called the worksheet to Schedule A. I'm going to refer to that in some of the slides here as the worksheet A. And then completion of the Schedule A, and then completion of the loan forgiveness application form. I also want to point out that unlike a lot of loans or a lot of IRS or federal documents or SBA documents that you complete, this one's a little bit different. The good news is that by the time you complete this, you have a clearer idea of what should be the amount of loan forgiveness or that portion of your PPP loan that is going to be forgiven. And so that's much more of a good news thing than a bad news thing that you might get in a lot of other federal documents you receive. So the worksheet to Schedule A completes, this worksheet does 4 different things. It computes the eligible compensation for each employee. It caps that compensation at $100,000. It determines the full-time equivalent for the hours for the covered period or the alternate cover period that I referred to earlier. It uses the FTE to determine any reduction in loan forgiveness. Then you have tables 1 and 2 in this worksheet that determine the salary and wages paid to each employee during the 8-week period as compared to their 2019 annualized rate. So, in a quick summary, if you want full loan forgiveness, the idea here is to have the payroll dollars match 75% of the PPP loan that you received, 75% of that to be used during the 8-week period in the criteria that I've already provided you. And then the additional component is the full-time equivalent headcount, which gives you a lot more flexibility and options relative to who you bring back, when you bring back, when you start paying them, and so on and so forth. But it's important here to realize that there is this FTE, which from a full-time headcount should match what the loan is based upon, the hours, not just the dollars, but the hours of payroll that the loan was based upon. And then when you apply for the loan forgiveness, as long as you match that from a FTE, which they're going to calculate as a 40 hours, which I'll describe in a minute, basis. So let's go to the next slide. All right, so worksheet A. It includes in the payroll costs are the salary, wages, commission, cash tips, vacation pay, parental, family, medical, or sick leave, and severance pay. All of those things are calculated into this. One of the questions that I've been getting as a clarification on this, though, is that a payroll cost includes all of those additional items that you wind up paying, including state-based labor and industries, workers' compensation, unemployment, state-based unemployment portion in state of Washington, but it cannot include federal FICA or tax withholding. So you actually have to remove those from it, and this worksheet helps you do that. Also excluded are salaries in excess of $100,000, employees outside the U.S., sick or family leave under the Families First Act, which was one of the first stimulus measures. And that's just one of the items that is excluded from this. Some of these exclusions are to prevent essentially the essence of double dipping. But also excluded from this worksheet are independent contractors, because those are not eligible as employees at all. But owner employees on W-2 wages, self-employed, and partners, these are added not as part of this worksheet A, but are added to the Schedule A at a later point, which I'll describe. But using 75% of the PPP loan amount on qualified payroll during the 8-week period establishes that element for full forgiveness, and this is considered to be safe harbor for payroll. Next slide. So let's talk about the FTE requirement. The average FTE calculation is done by way of two methods. The first is adding the total employee hours. And again, this is a comparison of the hours that the payroll was based on when you applied for the loan, as well as the hours that are used during the 8-week period in order to get the full loan forgiveness. So you can calculate that at adding up those hours and dividing by 40, or you can calculate it as a 1.0 for anybody working over 40 hours and a 0.5 for anybody working less than 40 hours. You add that up to determine the full-time equivalent. A similar calculation could be made, will be made on this within this worksheet and be asked for, is the FTE average of the PPP that the loan was based on, as I've just said. And those reference periods for that, as defined in this application, are either February 15th, 2019 to June 30th, 2019 to calculate an average, or January 1, 2020 to February 29th, 2020, or for seasonal employers, May 1st, 2019 to September 15th, 2019. And this is an option that you select on this forgiveness application. Next slide. Now let's talk about the final of the FTE. If the FTE matches the 8-week FTE, the historic, then there's no reduction in the forgiveness for the FTE, and this is called the FTE safe harbor. If that's not a match on either the FTE or the payroll, then the loan forgiveness is reduced accordingly. To get the full loan forgiveness, as I have said, 75% of the loan amounts used for qualified payroll, 25% used for qualified rent, utilities, and mortgage interest, and there has to be a match with the FTE, the full-time equivalent. But here are some new allowances in this. If an employer can show a written offer to rehire an employee during the 8-week period, but it was rejected, then that reduction in the FTE will not result in a reduction of the forgiveness. And so this is a new important point to note. So this gives you additional flexibility in calculating what your loan forgiveness would be. The same is true if an employee was fired for cause, voluntarily resigned, or wanted a reduction in hours. So if you can document those things, that gives you much more flexibility in the calculation of the FTE. Next slide. What about sole proprietors, self-employed individuals, as well as I referred to earlier, owners getting W-2 wages and your partners of the entity. Well, the self-employed forgiveness is related to the payroll costs at 8 weeks out of 52 weeks for the year of line 31 of an individual's 2019 Schedule C. To do this and to qualify for this, you really should have your 2019 tax return completed and have in that Schedule C, the net earnings are line 31. And this is how they're going to calculate what it is that you're eligible for in terms of your pay as a self-employed individual. And you're going to put this into line 9 of the Schedule A. You're going to also include amounts paid to the self-employed there, as I just said, but also owners on W-2 wages and general partners, which are capped at $15,385 each per person, which is 8 weeks out of a year with a cap of $100,000. The amounts paid to these individuals during the 8-week period are totaled and added to line 9 of Schedule A. Next slide. So here's a list of the things that I feel that we don't really know, that we're waiting for some guidance on, which hopefully will be forthcoming here in the next couple of weeks or sooner. One is, as I had mentioned before, it's not clear what the idle impact on the PP for idle loans not processed before the PPP is issued or the idle was not refinanced in the PPP. We also are not sure for employees who make more than $100,000 on an annualized basis as shown by salary, paid January 1, 2020 to March 31st, 2020, that calculation is more complicated. And the worksheet works on those tables 1 and 2, works you through this, but there are still some questions and some gray areas relative to it that we're hoping to get some guidance on. The other thing is there going to be a flexibility that's added to choose when your 8-week starts? The answer is, I've already described a couple of areas of flexibility, but what we don't know is Congress going to change this time frame? As of yesterday, this is the information that we have. And it's based on 8 weeks. And I've been receiving several emails from clients of ours saying, I heard that it's going to change to 24 weeks or to 16 weeks or to some other number. We just don't know what's going to happen. This has to work its way through Congress. I do know that there are several working on it as a bipartisan basis I'd mentioned earlier, but we're going to have to wait and see. If that happens, it's going to change a lot of what's in this loan forgiveness application. We also don't have a final date where the loan forgiveness with that lender, when the final possible date that you've got to apply for it. There's also a definition or limits of any pay period for the historical cash and FTE calculation. I mentioned that one of the things that you can do is start the 8-week period at the beginning of your pay period. And in the application, it defines it as any pay period. We just don't know if they're going to nail that down and be more specific. At this point, it's whatever the next pay period is that you typically can document in your payroll records. Also, payments to the self-employed, owners getting W-2 wages, and any partners are included and allowed for forgiveness, but guidance on some of the qualifying amounts is still missing. So with those ambiguities thrown into this, that's the end of my presentation. And I would turn it back over to Christina at this point. I'm sure there's a lot of questions, and I think that we may have some more from Janie. Before we get there, though, I did want to point out, for those of you that are interested in contacting us at the Small Business Development Centers, we've been working in the state for 40 years as of this year as an original federal-state partnership established by Congress in the Small Business Act 40 years ago. We currently have 25 locations around the state with 30 certified business advisors ready to serve you. And here's some contact information at the top, as well as an email address that will get you straight into our intake center that will get you to the most appropriate advisor near you. With that, thank you.
Great, thank you, Steve. And I just want to reiterate, they are a great resource. So please, I hope you copied down that email because they can really help you out. So thank you, Steve. Now we'll go to Janie Sacco, Marketing and Outreach Specialist, Seattle District Office from the U.S. Small Business Administration. And just before I switch it over to you, Janie, I want to remind people to please post your questions to the Q&A section, as we'll be covering some of these during the Q&A portion of our program. Okay, Janie, I'll turn it over to you.
Thank you, Christina, and thank you to the One Redmond team for this event, and for Mark and Steve's comments. Makes mine a little bit easier to do. Before we start with the examples that I'm going to cover, I would like to encourage you to check with your PPP lender as to their submission requirements for the forgiveness application. Some of them may want you to complete the form electronically on their site. Some may have you submit your completed form electronically. So, and there are other ways of getting it to your lender. So please determine that with your lender so that you're processing this as efficiently as possible for yourself. Okay. One thing that I am going to clarify as we get in is a change on the documents that I prepared because I noticed that there was an error. So we'll start. I'm going to give you two separate examples of the loan forgiveness application completed. They are very simple businesses, but I think they represent many of your businesses out there. So let's go ahead and get started. Next slide. Okay, so I'm going to provide you with these two examples. The first one is applicable to either a corporation or an LLC. The second one will be for a sole proprietorship. So for example one, under a corporation or an LLC, I did assumptions for ABC Inc., where during the covered period, the owner employee earns $6,000. They also maintained 2 FTE employees after the order. They laid off 3 FTE employees after the order. And they rehired all 3 FTE after receiving the PPP loan. In addition to the staff, they paid $5,000 for employee health care insurance during the covered period. And they also paid $3,000 for state and local taxes during the covered period. Next slide. This page, page number 3 of the application, is one of the 3 pages that Steve referenced has to be provided to your lender. And this is the big picture of all the content on that page 3. We're going to break it down for ease into 2 sections. Next slide, please. The top of the form is a good start for you. It is just about you. So you're filling out all of the boxes relative to your legal entity. So ABC Inc., if ABC Inc. has a trade name, then I would go to the Department of Revenue website, www.dor.wa.gov, to obtain my trade name, just to make sure it's, I'm correct. And then the business address really should be your physical address. And then you put in your business tax ID number or EIN, or in this case, TIN or EIN, because it is a corporation. You put in your business phone, your primary contact for the business, and your primary contact's email address so that anyone can get a hold of you for any questions. When you're filling out this form, you have an SBA PPP loan number. That number is on your SBA authorization document, which your lender should have provided you a copy of. The lender PPP loan number is the actual number on your loan documents from your lender. The easiest way to find that is generally from your note payable. In this example, I made the assumption that the PPP, I can't do it, 3 Ps, loan amount is $50,000, and that the date of disbursement was May 6th, 2020. Then you list out the employees at the time of loan application. And remember, one of the assumptions I made was that the owner retained 2 FTE. So you would pull that number from page 9, step 1 of the worksheet. Okay, and then the second one relative to your employees is at the number of employees at the time of forgiveness. Okay, so that again in this example was 5 because they had to and they rehired 3. So you have a total of 5 employees at the time of forgiveness application. And I plugged in an idle advance amount of $2,000 just for drill for the form so you could see how that would look. Your idle application number is actually, you should be able to get that from the paperwork that you entered in at the time you applied for your idle loan. And that would have been on the SBA.gov disaster assistance website. So then what you need to mark here is your payroll schedule. And I am going to say one thing. The alternative payroll covered period is either weekly or bi-weekly. It has to be one or the other. I marked twice a month in error here. So that is an error. I should have marked bi-weekly in this example for my start date. All right. On the covered period, you're going to select one or the other. I gave you both examples, but do see that I put or in there. And the covered period in the first example starts with the date you received your loan proceeds. So that matches your disbursement date. And it runs 56 days. So that is your covered period. So if I did my counting of my days properly, the covered period from May 6th to June 30th should be 56 days. Alternatively, if you have a weekly or bi-weekly payroll, you may use the start date of your payroll period following the disbursement of the loan. So in this case, I made the assumption that the first pay date after you receive the money was May 15th. So if you choose that option, you would take 56 days from your payroll date. In this example, it would extend your covered period out to July 9th, 2020. Okay. The other thing here is there's this box. If you have a PPP loan in excess of $2 million, then you do have to mark that box. But in this example, it is well below 2 million, so I did leave it blank. Next. Okay, on the bottom of the page, what you're doing here is you are really sourcing these numbers from a couple of different places. Sometimes you have to go to the PPP Schedule A, line 10 on the document and pull the data from there. Some of the data you're just entering here for the first time. So when I looked through and completed all of the schedules and the worksheets and everything that Steve went over that we have to do the computations for, this forgiveness looks like this. And line 1 ended up being $48,000 in payroll costs. And I assumed no mortgage interest was paid on a business real estate loan. On line 3, I assumed that they had 2 business rent payments of $7,500 per month, so that would total $1,500. And then I assumed that they had business utility payments of approximately $500 or about $250 a month. So again, line 1 is a calculated number from Schedule A. The other for 2, 3, and 4, you would actually enter those in based on your what you paid. Okay, and then when we go to line 5, that too is a calculated number from PPP Schedule A, line 3. So you would pull that data from the schedule and transfer it here. In this case, it happens to be 0. So then when you get to line 6, you're adding up lines 1 through 4 and deducting line 5. So in this case, the math works out to $50,000. Line 7 is also pulled from Schedule A. It's pulled from line 13. When I did the calculations, it ended up being 1. All right. So to get to line 8, you simply multiply line 6 by line 7. That calculates out to $50,000. Line 9 is your actual PPP loan amount. Again, in this example, it was $50,000. The trickier one here, because it's not real logical to do, is you have to do a calculation for line 10. And what you do is you take line 1, in this case, $48,000, and you divide it by 0.75 or 75%. So again, you take the line number 1, divide it by 0.75. And in this case, it comes up to $64,000. So when you're looking at this and you're going to line 11 for your actual forgiveness amount, remember it is the smallest of lines 8, 9, or 10. In this example, line 8 and 9 happen to be the exact same number. That's not always going to be the case. But the bottom line here is, out of those 3 numbers, $50,000 is the lowest amount, and that calculates out to your amount of forgiveness. Next slide. Page 4 of the application is the second of the 3 pages that are actually submitted to your lender. And as Steve indicated, it's one of the easier ones, but because you're just going through initialing, certifying each one of the statements on the form. But being a former lender, I always tell everybody, make sure that you read every line to make sure that they are accurate, they're true, and that you are really understanding what you're certifying. So I'm not going to go through each one of those because we don't have enough time to do so, but they are pretty straightforward, and they're basically just having you validate that the information that you're providing here is true and correct for each one of those different statements. And then you sign the document as an authorized representative of the borrower at the bottom. You put the date, and please note, I put the date as July 10th, 2020, because that's the next day after the covered period ends. It doesn't have to be, but it should be post coverage of the covered period for this particular application. You do print your name and put your title down on the document. So this one's pretty straightforward. Next. Okay, so here is the infamous PPP Schedule A. And again, you need to have data from the Schedule A worksheet, which is a subsequent page as part of this application. And you need to complete that before you start filling this out. But the bottom line is that these numbers carry forward from boxes on the worksheet. So line 1 is the actual cash compensation noted in box 1 that you calculate from the Schedule A worksheet, table 1, which we'll be going over in a minute. And then line 2 is also from that worksheet. Thank you. Line 2 is also from that worksheet, but it is the average FTE box 2, table 1. And then in this particular case, I had a 0 entry on line 3 for the salary hourly wage reduction box, also from the PPP Schedule A worksheet, table 1. So you go through and you do these calculations. And again, we're going to go through that worksheet in a few minutes here. But all of this information is pulled from table 1, boxes 1, 2, and 3. And these are really important for you to do those calculations correctly. As you drop down to the middle of this page, there's another table on that worksheet. It's table 2. In this case, both lines 3, 4, and 5 were 0 from that worksheet. And then the non-cash compensation payroll costs during the covered period or alternative payroll covered period have to do with contributions for employee health insurance. And again, part of the assumptions that I made at the beginning for line 6 was that the employer paid $5,000 in employee health care insurance. So that's going to be whatever your actual number is for the covered period. I made the assumption that this business did not contribute to employee retirement plans, so that's why that is 0. On line 8, I estimated employer, state, and local taxes to be assessed at $3,000. So that's what I put in that line. And again, these are going to be your actual costs based on your business during that covered period. Next. Compensation to owners. One assumption that I made is that during the covered period, the owner employee, even if you have W-2 salary, okay, your compensation needs to go on line 9, all right? And so it is not included in, you are not, as the owner, included in the Schedule A worksheet, Table 1 nor Table 2. So your compensation only appears here. So when I added up the total payroll costs for line 10, I added lines 1, 4, 6, 7, 8, and 9, and they came up to be $48,000. And then for the FTE reduction calculation, in this particular case, it worked out where the FTE reduction quotient is 1, and that is on the worksheet. So these numbers all flowed through to page 3 of the application. And so this document is really one of the important ones because it has a lot of information that transfers over to page 1. Next slide. I'm sorry, page 3, the first page of the actual application for the information. Okay, so then this is one of the worksheets. And as you scroll down is on page 7, is there if we go to the next slide, is it a little bit larger? Yeah, thank you. Okay, so one of the things you're going to have to go through and calculate, as Steve indicated, was on page 7, you're going to have to go through and do your annualized compensation per employee that you list on worksheet 1. So when you see the table, you will see all of the names of the employees. I just started and only did one example for John Doe. He's the first one on my line. But remember, you do one of these calculations for each employee in table 1 on page 9 of the application document. In this case, I made the assumption that the average annual salary or hourly wage during the covered period or alternative payroll cover period worked out to be $45,750. Again, it's the average annual salary. And then I went back and looked at what the average annual salary or hourly wage was between January 1 and March 31st, 2020. And for ease, in this example, I had it be this consistent on an annualized basis. So the calculation in C is dividing A by B, and in this case, it came out to be 1. So you would do this for each of your employees. And what I want you to note that if 1C is 0.75 or more, you enter 0 in the column box for that employee on the worksheet. If it is less than 0.75, then you go on to step 2 and do further calculations. Okay, so for ease, I made the assumption that if you're hiring people back, you're probably going to keep them at the same compensation level. And that's what that would look like on this page 7 in your worksheet. Next slide. So the infamous PPP Schedule A worksheet. What you see at the top is each employee's name has to be listed, and their last 4 digits of their tax ID number has to be listed. And the cash compensation listed is during the covered period or the alternative payroll covered period. And then when I did the calculation for the average FTE from the prior slide, it was 1. And in this case, there was no reduction in the salary, or there wouldn't have been in the hourly wage reduction. Okay, so again, I made the assumption that I'm hiring all 5 of these employees back at their prior compensation, and they all are 1 full-time equivalent, working 40-hour weeks. So what this worksheet has you do is then total all of your entries in box 1, box 2, and box 3 for the column. What I want you to remember is that if you have more than 7 employees, you just make another list, okay? And then table 2, the boxes ended up being 0 in this example because I assumed that none of the employees had an annualized rate of compensation of more than $100,000 for any pay period in 2019. So that's why this one is not applicable. Certainly, if you do have employees that meet that criteria, then they do need to be listed there and treated accordingly. The full-time equivalent, or FTE, reduction safe harbor calculations, in this case, I kept pretty straightforward. So step 1 is entering in the total average FTE between February 15th and April 26th. So I knew that we had 2 FTE during that period of time, because I kept that staff on board in this example. In step 2, it says enter the borrower's total FTE in the borrower's pay period inclusive of February 15th. Follow the same method that was used in step 1. So in 2015 through February 15, ABC Inc. had 5 employees. In step 3, it says if the entry for step 2 is greater than step 1, I can proceed to step 4. Other than if it's not greater, then you're going to have to do a little bit more work here, because that's saying that you did not hire all the FTE back and you have to do further calculations. But I'm making the assumption that most of the small business owners, again, in this case, are hiring all of their staff back, or if they are not hiring the same individuals back, that's okay, as long as they're replacing the FTE hours, okay? So again, I want to be real clear here. If you decide not to hire certain people back that you laid off, but you hired someone to replace them and you replaced their hours with that individual, that's who you would list under the employee's name. All of your current employees during the covered period or the alternative payroll covered period. Okay. So in this example, again, it ends up being 5 on step 4. So we're done with this particular page. So next slide. The last page in this is page 11. This is an optional page, but for the SBA, it's awfully nice to know who our borrower is. And so you would put your principal name in there. I put Maria Doe, and the position as president. I assumed that Maria was a veteran and that her gender was female and her race was Black or African American, and that her ethnicity was non-Hispanic or Latino. So again, this particular page is a voluntary disclosure. It has no bearing on the loan forgiveness decision, but it does help the SBA track the borrowers that are receiving funds from the SBA program. Again, this is an optional form, and I just put it in so you could see what one example would look like. Next slide. Okay, so now we are on to example 2 for a sole proprietorship. And again, here I made certain assumptions. And this one is for John Smith doing business as Smith's technical support. I'm assuming he takes a draw of $2,500 during the covered period, that he maintained no FTE after the order, that he laid off 1 FTE after the order, and that he rehired 1 FTE after receiving the PPP loan. He paid $0 for employee health insurance during the covered period, and he paid $350 for state and local taxes during the covered period. Next slide. Again, for this, we're on page 3, the first page of the application document that you need to complete. This one's fairly easy. I can't remember if this slide was broken into 2. So I'm just going to go through this whole page instead of splitting it up. Again, you put in your business legal name. In this case, it's John Smith because he's a sole proprietorship. And then his trade name is Smith's Technical Support. And then his physical address, his tax ID number or EIN. If he does not, if he had no employees, it could be his social security number in that particular box. His business phone, the primary contact would be John Smith and John Smith's email address. Again, the SBA PPP loan number is taken from the SBA authorization number. They're the same. And again, your lender should have provided that to you. And then you have the lender PPP loan number, which again is on the note payable document. In this case, I assumed that the PPP loan amount was $12,500 and that the loan disbursement date was May 10th, 2020, which happened to be a Sunday, so I didn't look at my calendar very well. Employees at the time of the loan application, again, were 0. He laid his people off. He only had 1. And then at the time of loan forgiveness application, he had 1 because when he received his loan proceeds, he rehired the 1 employee that he laid off. And he received an idle loan advance of $1,000, and that represents the $1,000 per employee. The idle application number, again, is from the application submittal. At the time you submitted your idle loan request, you should have received a number, a reference number, application number that stays with your application throughout its process. Okay, again, for the payroll schedule, I gave you the same thing and I made the same error there. This should be either weekly or bi-weekly to have an alternative payroll covered period. So the first business day after the loan disbursement for the covered period would be May 11th, 2020, and 56 days later would be July 5th, 2020. If John Smith had a weekly or bi-weekly payroll, then he could have an alternative payroll covered period. And making the assumption that the payroll period started on May 15th, again, this would run through July 9th, 2020. Okay, and then in this particular case, for the forgiveness amount calculation, what we have is payroll and non-payroll costs. So line 1 from the PPP Schedule A, which we will see later, line 10 is $12,850. I assumed that there was no business mortgage interest payment, no rent or lease payments because he works from his home, and there were no business utility payments. All right. And then for line 5, again, looking at the PPP Schedule A, line 3, the calculation was 0. So when you're looking at this again, you're adding up lines 1, 2, 3, and 4, and then deducting line 5. So the result ends up being $12,850. The FTE reduction quotient on line 7, again, is from Schedule A, line 13. That happens to be 1. So you go through, do your math. On line 8, you multiply line 6 by line 7. That comes out to be $12,850. Line 9 is the PPP loan amount, which is $12,500. You take line 10, and again, that is line 1, $12,850 divided by 0.75. That comes out to $17,133. So the lowest number of 8, 9, and 10 is $12,500. That is your forgiveness amount. Okay, so next slide. Again, we're at page 4. The second page is mandatory to be submitted. It is the same issue here. In this case, for a sole proprietorship, it would be John Smith as the signer. John Smith is a printed name. His title would be owner. You could always put sole proprietor. Either one is fine there. And again, his date on this form is after his covered period date. So all of the funds have been dispersed. They're all accounted for, and then he can go in and apply for forgiveness. And again, please note that he initialed all of the little boxes certifying that all of that information was true and correct. Next. Okay, so here is the PPP Schedule A. So what were the assumptions that I made there? Well, line 1 represents the one employee that you will see on the Schedule A worksheet, Table 1. So that's $10,000. There was only one employee that he hired back that was laid off, and his FTE or her FTE is 1. And that's what I put in line 2, also from the worksheet. Line 3 was 0 from the worksheet. And again, that was a calculated number. So going through the lines 4 and 5, that was from Table 2 on the worksheet. He did not have an employee that made over $100,000 in 2019. So those ended up being 0. And then line 6 is the total amount paid by borrower for contributions to health insurance, employee health insurance. That was 0. Line 7 was for the retirement plans. That was 0. And total amount paid by borrower for employer, state, and local taxes, excuse me, was $350 in this example. Now, here's the other thing on line 9. This was, again, the total amount paid to a self-employed individual. And in this case, a sole proprietor, sole owner. And I made the assumption that that would be $2,500. So the total payroll costs are from lines 1, 4, 6, 7, 8, and 9. That totals $12,850 in this example. And then line 13, again, is the FTE reduction. There was no reduction, so it ended up being a 1, and that is from, again, the safe harbor calculation. So all of those numbers are from the worksheets or actual costs that John Smith incurred here for compensation. Next. Okay, so the infamous PPP Schedule A worksheet, again, the employee's name, Georgia Brown, her last 4 digits of her tax ID number would be listed here. The cash compensation during that period would be $10,000. The average FTE calculation, she was a full-time employee, is 1, and there was no reduction in her salary or hourly wage, so that ended up being 0. And she did not make more than $100,000 in 2019. So the table 2, all of those in this case are 0 as well. So then I went through and again did step 1, step 2. I skipped step 3 and did step 4 to calculate the FTE as of June 30th, 2020. And again, in this case, it ends up being 1. So again, you're pulling all this information from the worksheets, from your payroll and records, and making sure that you're entering this information in correctly. Clearly, if you're a sole proprietor and you have more than 1 employee, you may have 10. If you have more than 7 employees, you're going to need to expand the worksheet for table 1. Next. So that is it for the presentation, and I appreciate your time, and we'll go on to questions, and I'll turn it back to Christina. Thank you.
Sounds great. Thank you, Janie. Yes, we are now going on to the Q&A portion of the program, and we've got quite a lot of questions. There are many questions that have been answered in the Q&A box. I know it seems like Steve was busy answering some of those questions, so please take a look at the Q&A box in the Answered Question tab. But we have had questions about how you calculate FTEs when you have a number of part-time employees. Can one of you give some guidance to the businesses here on how to calculate FTEs with multiple part-time employees?
I'll give you my shot at that, and Janie, you can jump in if you want. But one of the key things a question that keeps coming up is, do I have to have the same people doing the same job, working the same hours? And the answer is no. So you add up the total hours in historic that all of these employees worked, and you divide by 40, or you use the alternate method, which is 1.0 for 40 and 0.5 for less than 40. And you add that up to calculate your FTE, and I would use whichever one winds up being most useful or valuable to your calculation at the end. But it's important to note that the employees don't actually have to be the same people that were working and that are working during the 8-week period. They don't have to be doing the same job. They don't have to be doing it in the same place, and they don't have to be working the same number of hours. So you could easily have 100 employees all working 20 hours a week, and that equates to 50 employees working 40 hours a week. And if you pay those 50 employees working 40 hours a week during the 8-week period, you should still also qualify for full loan forgiveness.
All right, thank you. Janie, anything to add there?
Well, the only other thing that I would add is I have talked to people that have worked with their CPAs or tax preparers, and they indicated that 30 hours was considered a full-time equivalent for their business. And all of the paperwork that we see really indicates looking at a 40-hour work week. So that would be the only thing that I would clarify there.
All right, thank you. The next question we have, it says, so if you have an employee quit after the 2/29 or February 29th period for calculations of full-time employees or FTEs, but before you receive the PPP funding, do you need to include them in the FTE calculation?
What day did they quit?
Quit after 2/29, February 29th.
I think they do. Don't you, Steve?
If they quit after February 29th, but they were included in the original, yeah, this would probably help support it might not help support your FTE requirement. If it were me, what I would do in that kind of a case is I would condense other employees to be able to meet the FTE requirement, or I'd hire somebody new so that I was being able to pay at the same FTE requirement but you're right in that the periods it depends on the period that you used to support your historical average for FTE.
Okay, great. We have an interesting question. It says this particular group has 5 PPP loans across different companies. Can they maximize corporate employees that exceed the maximum of the 15,385? Can they allocate the remaining wages to their other companies?
I have asked that question on behalf of former clients of mine where they have 7 operating companies, and they had employees that worked at multiple legal entities, and in aggregate they made more than $100,000 in 2019, but that $100,000 was not represented by any one legal entity. So the answer that I received was that they do not fall within the $100,000 limit. Okay, so if I take that answer and transfer it over to this question, not to try and finagle around things, but it would seem that if they had an employee that worked at one company and they made more than $100,000 at that entity, and they need to count that person for FTE purposes for entity 1, but they wanted to stay under the $100,000 threshold. I hate to say it, but there's probably some opportunity there. But I don't know. What do you think, Steve?
Yeah. I'm sorry, I've been answering all these, so I've been trying to move. I've got through 34 of the questions so far, but every time I do it, it increases from 40 to 50 to now it's up to 64 I haven't gotten to. So I'm not sure we'll get to all of them, but the PPP loan is based on an employer identification number. And so it needs to relate to the payroll records of the EIN that applied for the loan. And I think that that's what this whole thing is based upon. If somebody works for multiple entities, and even if it's the same ownership basis, if it's a different EIN, Each of those EINs, employer identification number, which identifies a singular business entity, needs to make their own application for their own PP and base it on the payroll records of that EIN.
All right, super, thank you. We have a question, says when we apply for the PPP loan, we only had one employee. Can we use the loan to pay for more than one employee's payroll after we receive the funds?
Yes, the answer is yes.
We like that answer. Okay, can we use the funds to pay the payroll that we owed our employee for previous months?
I would say the answer is no, because it has to be payroll during your covered period.
I agree.
So the next question would be about back pay. If employees were taking a reduction in pay and the employers wanted to give them back pay, is that allowed?
Can you say that again?
Oh, it was actually, the question was about back pay for employees that took a reduction in pay or no pay at all during this period.
Yeah, I don't know exactly what back pay means, but as Janie said, you can only get loan forgiveness on the dollars used for the covered period or the alternate covered period.
Yeah, I think the answer is no, because it does not fall, that money would have been perceived to have been earned prior to the covered period by the employee, which
Okay.
falls outside the parameters of the covered period.
All right, and we have quite a lot of questions on what can be part of that 25%. I think that we've got some utilities like website hosting, cell phones, employer paid union dues. What kind of things could be considered for that 25%?
There's only 3 allowed outside of payroll, and they are interest expense tied to a commercial real estate loan, and or rent or utilities. So those are the only 3 allowed uses that make up that 25%.
Is there a definition of utilities? We're getting some questions if like website hosting is considered a utility or cell phones.
We don't
Go
have
ahead.
clear guidance on that. I believe that my understanding is that cell phones are included. I think that was in one of the interim rules, but not website cost.
Okay, great. Let's see, our next question says, is our entire group health insurance bill eligible for forgiveness, or must we subtract amounts for dependents?
I believe that it's whatever is included in the employee's payroll. So the employer portion for the employee's payroll is considered a forgivable portion.
And it's part of the benefit, the employment benefit that the employee is receiving. So,
yeah.
So,
Okay.
yeah.
Perfect, thank you. Another question, do you round up or down when you use fractional FTEs? For example, if a FTE is 4.4.
I would round down, I think. I would round down, because 4.4, traditionally when you're rounding, and for FTE purposes, this is really, if you're at less than 4.5, you're not close to 5. So the only thing you'd round up for a whole number is 5, or round down to 4. And I would say, little math geek than I am, I would do 4 FTE for a whole number.
All right.
Yeah, if you wanted to use a whole number, I think the most important thing is that whatever method you use, the historical needs to match what you use during the 8-week period.
Okay. I think we have time for one more question. This one's a sole proprietor question. Angela asks, just to clarify, as a sole proprietor, I can in fact include my owner's draw for the PPP. I was informed by my bank that if I did not pay myself through my payroll company, any compensation I received would not qualify as taxes, were not collected, paid for that owner's draw. I want to make sure that the PP funds can in fact be used for owner compensation or draw as a sole proprietor.
Well, the answer is yes there. And what you would have used to establish your payroll amount would be the line 31 of your Schedule C for 2019. And you would have taken your average monthly payroll and multiplied that by 2.5 times. I'm sorry, your the operating profit divided by 12 is considered your monthly income. Okay, for a sole proprietor only.
So I agree with Janie. It's 8 50-seconds. So 8 weeks out of 52 times whatever is on your schedule 2019 Schedule C, line 31. And that's the amount that the loan should originally have been based upon. And so a key part here is did you submit those documents when you applied for the loan and base that loan request on that? And if you didn't, I'd be hesitant to be able to say after the fact that you're going to get loan forgiveness on essentially owner payroll that you didn't base the loan on.
All right, thank you. And that brings us to our last few minutes of the program. And before I close, I want to make sure that you all know that we did record this webinar. We will pull all the Q&As off this webinar and make sure that we get as many of those answers to you as we possibly can. Again, when we get new information, we will do our best to get a webinar up as soon as possible to get all the new clarification and guidance when it becomes available. I want to thank all our speakers for giving us your time and expertise today. We very much appreciate you. I want to say thank you to all our partners on the East Side who are working hard to support the business community during this pandemic. I want to thank you all for participating. Again, we're going to be following up with an email with a link and the resources that we've been referencing today. For key resources, our weekly webinars and grant opportunities, you can go to eastsiderecoveryhub.com. And thank you all again, and please stay safe and healthy.